Hello everyone, welcome back to the channel. Today we will be discussing transfer pricing documentation and compliances. Anyone who engages in an international transaction or a specified domestic transaction during the previous year has to keep certain information and documents as the board prescribes to assist the assessing officer and the transfer pricing officer in computing the income arising from the transaction. So what are those documents? There are 13 different sorts of information and documents that must be kept and maintained by a person. These data and documents can be categorized into 3 categories. 1. Enterprise-wise documents that explain the business, its relationships with other related businesses, the type of work it does, and so on. 2. Transaction-specific documents. These are the documents that go into additional detail about the overseas transactions. It contains details on each transaction such as the nature and terms of the contract, an explanation of the functions performed, the assets used, and the risks assumed by each party to the transaction, as well as the economic and market analysis. 3. Computation-related documents that describe and outline the methodologies used as well as the actual working assumptions, principles, and changes made to transfer pricing, as well as any other relevant information, data, or document that was used to determine the arm's length price. Burden of proof. Here it is important to note that the transfer pricing documentation requirements are linked to the taxpayer's burden of proof to demonstrate that the transfer price is used in conformity with the arm's length principle. One of the prerequisites for the taxpayer to discharge this burden is to keep prescribed information and records in relation to an international transaction entered into with an affiliated firm or a designated domestic transaction. A transfer pricing audit may be initiated on a failure to retain information and records in conformity with the regulations. Any failure to comply with the transfer pricing documentation may result in a penalty of 2% of the value of foreign transaction or designated domestic transaction. Now let us understand the submission of documents to tax authorities. There is no necessity to provide the transfer pricing documentation at the level of initial compliance in the form of a report. The only thing that is required is that the concerned taxpayer must receive a report from a chartered accountant in the appropriate form and submit it by the stipulated date. A chartered accountant's report is essential for entities engaging in foreign transactions, failing which a penalty of ₹1 lakh might be imposed. The report includes a certificate from the accountant stating that in his opinion, the taxpayer has kept proper information and records as stipulated. Now let us find out those entities on which the transfer pricing documentation does not apply. The necessity of maintaining transfer pricing documents is waived in the case of persons who have entered into overseas transactions, the aggregate value of which does not exceed ₹1 crore. However, the concerned taxpayer may be asked to prove that the revenue being derived from overseas transactions is computed in compliance with the arm's length rule. However, there is no exception for such taxpayers in obtaining and furnishing an audit report. Even if the aggregate value of the international transactions during the previous year does not exceed by 1 crore, the taxpayer is required to obtain and furnish an audit report. Let us now look at the retention period of transfer pricing documentation. The transfer pricing documentation must be kept for a period of 8 years after the end of the relevant assessment year. The transfer pricing documentation must be kept for a period of 8 years after the end of the relevant assessment year. For more such information, please like, share and subscribe to this channel. Thank you.